Hello, everyone. Today on the Final Bar, it's Wednesday, March 1st. Happy March. We'll talk about the market continue to be in a bit of a distributive phase. We'll also talk with a special guest, Adrian Zduńczyk, expert in cryptocurrencies. We'll see what is top of mind for him. Ladies and gentlemen, this is the Final Bar. Hello, everyone. Welcome to the Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a cloudy Redmond, Washington. Thanks for joining us every weekday after the close as we break down the activity in the markets using the best practices of technical analysis. The technical toolkit is really optimized to help you navigate uncertain times, to try to make sense of market dynamics by focusing on investor psychology, thinking about what price teaches you, the message the markets provide back in the form of price, breadth, and sentiment, telling you about the interplay between buyers and sellers, between fear and greed, all those things that are reflected into in price action. Today, we're going to dig into a number of different asset classes. We'll have a bit of a focus on cryptocurrencies with today's guest for sure. We're also going to talk about equities. We've got a number of earnings releases coming through, including Salesforce.com after the close today here in the U.S. So we'll go through a number of those different charts and see what information we can tease out of the charts. Let's get right to our market recap. As I mentioned in the introduction, a bit of a distribution day today, although the Dow just narrowly finished in the green. The S&P and the NASDAQ both in the red today. The S&P down about 0.5%. That's just above 3950. The NASDAQ composite down about 0.7%. to 11,380. Mid caps and small caps actually both managed to finish narrowly in the green by about 0.25%. Volatility a little bit off of where we were yesterday. So honestly, looking at the major equity averages, a bit of a mixed bag, although the major benchmarks we would track, the S&P and the NASDAQ, feeling the weight. Now, what's interesting, thinking of yesterday's conversation with Chris Verone at Strategas, really interesting discussion about a lot of different dynamics at play in the market, a lot of different headwinds and tailwinds. You know, his comment was, it's an indecisive period, right? I think there's bullish and bearish evidence to be had, but there's no denying that some stocks are working and some stocks are not. And I would wholeheartedly agree. I just did a video for my YouTube channel called Market Misbehavior. We talked about the strength in certain names like steel stocks versus the weakness in other names like entertainment names, media names, right? Just struggling. So in this market where the sort of benchmarks are between key levels and you're thinking of what level would be more bullish or more bearish, there are certain stocks that are clearly differentiating themselves. So a great reminder to focus on the charts, particularly on the message that I think relative strength provides back, which is how well this particular stock or ETF is doing relative to its peers. Interest rates overall moving higher, and that's certainly put a weight on some of the growth stocks that we would tend to cover. All three of the FANG sectors are in the red, for example, today. Rates moving higher, 10-year yield almost to 4%, actually touched 4% a number of times today, finished just a little bit below, but sort of the 10-year above 4% certainly feels like a psychological level, which is a change because, right, we topped out at 4.25, rotated lower, almost down to 3%. And all of a sudden pushing slowly and steadily back to the upside through the month of February. So far, you know, we continue that into March. And all of a sudden, what stocks are going to tend to do well if rates continue to push higher? If the dollar continues to be stronger, that's another question. Today, the dollar actually moving lower. The dollar ETF we track, the UUP was down by about 0.5% while rates were going up. Commodities, all the major commodity ETFs that we track in the green today, with gold up about 0.5%, silver up about 1/3%, crude oil, natural gas, all in the green. The energy sector by far outpacing the other 10 S&P sectors. Checking in on cryptocurrencies, all of the 10 major coins that we track on our platform in the green today. Bitcoin up about 1.1%, Ether up 2.2% to 1640. Bitcoin getting near and near to that 24,000 level. And we've talked about the importance of big round numbers and things like Bitcoin and Ethereum. We've now bumped up with Bitcoin up to a potential level of resistance. And again, today's guest, Adrian Zduńczyk, I'm excited to get his take on the chart of Bitcoin because I know there's a lot of question marks around a growing and more important asset class for many of us. Let's look at a daily chart of the S&P. just think about what we learned today. You know, the trend lines that I have, and I'll apologize yet again, I kick myself a little bit when I bring up one of my own charts, and I'm basically committing one of those chart crimes I tend to tell other people about, which is having way too many lines on the chart. But for me, it's funny. It's sort of an indicator. The more indecisive, the more challenging a market is to analyze, the more I'm drawing lines just to try to define risk and define potential reward and think about what levels are most meaningful to me. What we've honed in on, and I guess what I would try to highlight for you are the importance of some of these trend lines off of the recent lows. If you use the intraday low from October and connect that to the intraday low in early January, you can see we actually violated that. That's this bold-faced red line here. We actually broke that about a week ago. We actually traded below that trend line. It's right around the 50-day moving average. And from there, we've continued to push lower. But I think the other one to pay attention to, and arguably the most important, is using the closes. And when you think about the closing values, the reason why that's important, one of my mentors, Jeff Weiss, always reminded me, wait for the close, because a lot of things can happen. The close gives you an ending point to a particular day, particularly if you're thinking of something like an equity or like the day session of a future or something, or an ETF where it has a clear open and a clear close, right? When that close is locked in, a lot of activity happens going into the close, and that is sort of the last moment. Where did things end up? So being patient and waiting for the signal that the close can provide can be very helpful. Here's a problem. If you do that and connect the low close, which was there in early October, connect that to the low closes in December and early January, that's actually the blue dotted line that you see here. And we close below there today. So as of today's close, we're just trading down to the 200-day moving average. We did not close below it, but we're really, really close. And in my opinion, the 200-day is pretty key here. We talked about how important that was through the course of 2022. The inability of the major averages to get above their 200-day moving averages was an important signal. That changing in January was a very important, what I call change of character, where the market's actually showing it can get above a key level of resistance. Now we're back testing that from above. So I think we're right at that point. We break the 200-day, which is around 39.40. There's downside certainly to the December lows around 3,800, if not further. And I think that's when you'd have to redefine your assessment of what is the likelihood of a further retrenchment to the downside. What would your portfolio do in that environment? That's the sort of thought process I would hope you would go through. Just to finish off our market recap here, energy, as I mentioned, the number one sector up about 2%. Materials, number two, up 0.7%. Industrials, up 0.4%. What's interesting, these are sort of the what I call the MEI sectors, sort of those cyclical leadership, value-oriented sectors that tend to do well, or certainly tend to do better than growth stocks when rates are going up. So not surprising to see rates pushing to the upside, the 10-year yield threatening to get above 4%, and the value-oriented sectors that tend to thrive more in that environment, kind of getting it done and moving to the upside. The sector struggling today is actually a lot of defense on the bottom of the list. So utilities and real estate both down over 1.5% today. After that, it's all the FANG sectors: consumer discretionary, communications, services, technology, the next three down as well. Now, let's look at some individual names because there's been a lot of movement today. The biggest gainer in the S&P 500 is a solar stock, First Solar. Now, this is a chart we've talked about sort of randomly when it's kind of popped up. What's interesting when you look at the last 6 months on First Solar is the break above the November 2021 high was pretty meaningful, right? Because we round tripped from the peak in November of 21 to the low, and it really hit its low in February of 2022. All of these other sort of down thrusts were retests of that initial low that I think we made there in the first quarter. We found a continued support sort of in that 60-65 range, and from there gapped above the 200-day and have not looked back. Look at how we've had a number of pullbacks to just below the 50-day moving average. Every one of those now in the last 6 months has resolved to the upside and has led to First Solar making a new 52-week high. That pattern continued today. Now, the stock up big, about 16%. That puts it in the overbought condition with the RSI above 70. But overall, I would argue that is the latest move out of a series of buyable pullbacks as this name in a key group. This is the renewable energy equipment, names like Enphase Energy, ENPH, and others are in that group, as all the solar stocks, Sunrun and others are in there as well. But overall, a nice move to the upside and sort of continued bullishness. And what's interesting is while you have the newer energy names working, you also have the older energy names all up today pretty good. I think 7 or 8 of the top 10 stocks in the S&P today, all in the energy sector, including Valero, VLO. Now, again, this is maybe a little earlier on, but look at how this has pulled back to moving average support a number of times and rotated higher. Now, it's not held its 50-day particularly well, but it's stayed above the 200-day moving average, which I usually think of as more of a long-term barometer of where things are at. Most recently, we've had a couple pullbacks to the 50-day in the month of February. The RSI has bottomed out around 40, and that is really more classic sort of configuration for a bull market phase. So the bounce off the 50-day moving average today, pretty encouraging. And again, a lot of energy stocks with a similar setup. 2 earnings names to highlight here that are reporting after the close today. Salesforce.com. I was reading the Wall Street Journal this morning, if I remember right, about all the conditions with Salesforce and cutting part of the Salesforce, in the last week. But looking at the chart again, the break above the 200-day, the pullback to the 200-day around 160, and for now a move higher is actually kind of encouraging. The question is what happens around earnings. Now we're early on here. But in the after-hour session, about 10 minutes after the U.S. close, CRM up 10.6%. That's another 18 points above where we're at. That means it's actually gotten above the January swing high so far in the aftermarket. Now, there's a lot that can happen between now and tomorrow's open, so that's not necessarily locked in. And after hours can be noisy, particularly around earnings. But so far, a lot of optimism coming out of the chart of CRM. So just to finish off, what's struggling? Lowe's, one of the weakest performers today in the S&P, down about 5.5%. I'm not encouraged by charts that are unable to hold the 200-day moving average. So just like First Solar, just like Valero and others holding moving averages, the ones that are unable to do so, that's what I would put the question mark on as I'm reviewing the charts on my list. Let's take a quick commercial break. We'll be back with today's guest, Adrian Zduńczyk. We'll see you in a minute. Hey, everyone. Welcome back to The Final Bar. This is Dave Keller here at StockCharts.com, and it's such a pleasure to have you join us every weekday after the close. A couple quick announcements before we bring on today's guest. First off, we'll do a mailbag segment on Friday's show, and we'd love to feature one of your questions live on the air. Our email is thefinalbar@StockCharts.com. We're on Twitter at FinalBarSCTV. And we're on YouTube. Put a comment below the video you're watching on our StockCharts YouTube channel. We'll hope to answer one of your questions live on the air on Friday's show. Also, let's check in on some of the upcoming guests. Tomorrow, on Thursday, March 2nd, we have Mary Ellen McGonigal of Simpler Trading. Next Tuesday, March 7th, Mike Zaccardi, who's an investment writer and contributor to StockCharts.com, focuses on technical analysis for financial advisors. On Wednesday, March 8th, Aaron Swenlin of Decision Point will be joining us on the show once again. Also, next Wednesday, March 8th, if you go to StockCharts.com/thepitch, you will find info on our next episode of this fantastic series where we have 3 different experts, each pitching you 5 stock or ETF ideas. We'll be joined by 2 of our upcoming guests, Mary Ellen McGonigal and Aaron Swenlin will both be on there, and a frequent visitor to the Final Bar, Ms. Schneider of MarketGauge. 3 fantastic analysts with ideas to share with you. We'll go through each of them and then discuss them as a group. Again, go to StockCharts.com/thepitch for more information on that upcoming event. I want to welcome on today's guest, joining us on the show for the first time, Adrian Zduńczyk. Adrian is coming to us from Poland. He's the founder of a firm called TheBirbNest, which I think has taught a lot of newer investors, certainly, how to make sense of the crypto markets using technical analysis. Adrian, it is a pleasure to welcome you to the show.
It is even greater pleasure to be on the show. It's an excellent honor to be mentioned among such legendary names on the list, and for the guests I look up to, all of the works from StockCharts. You're doing an excellent job, Dave.
I appreciate it, Adrian. It's been really good to get to know you a bit and learn about your process. And I think you have a lot to share to help people make sense of a market that is still, I think, being discovered by many newer investors. We're looking at your chart of Bitcoin over the last couple of years. Talk us through how you're seeing this market and how it's evolving here so far in 2023.
Yeah, that's an excellent question. And of course, the technical analysis just provides us with the toolkit to manage and to measure the risk, right? And our issue with the market when analysis with technical analysis is that it may be subjective, right? One and the same chart can bring lots of different emotions to completely different people. And well, that typically is a source of noise, right? In fact, in the ideal world, everybody would look in the same chart and look exactly the same patterns, see exactly the same situation. However, that's not the case. So my opinion here is, well, backed by a little bit of trend following strategies, right? Which is why I definitely overlay, here the two crucial essential averages that are quite popular. We are talking about the 50-day moving average as well as 200-day moving average. And myself, going through the experience and gaining experience over the years, I had always struggled before to understand what the trend is. I mean, what is the direction? What the actual, trend is for the upside to the downside or it's sideways. Most of the time, in fact, markets move sideways, right? And only at times they trend. And those trends are those persistent directional movements that happen infrequently, but they are source of some very, very asymmetric returns. And once in a while, Bitcoin just really likes to show off those fat tails in the return distribution. Just so it was, from 2020 March low, all the way towards like the first high of 2021 in March, April, then following lower with a significant drawdown towards like $30,000, which was arguably the floor up there. Then moving back up and overshooting the top with around $69,000, $70,000 region. And then, of course, that marked the very peak of the bull market, which few people expected, right? Myself, I definitely was caught off the guard. Luckily enough, I had been busy before that in the Q4 of the 2021, just kind of like escaping the crypto market, diversifying into real estate, into precious metals, into well, whatever it was, of course, cash as well, outside of cryptocurrencies, and looking at significant drawdown, that later came through with the 2022 midterm bear market. Well, that definitely left a lot of people with doubt for what the future is going to be for cryptocurrencies. Many people got completely knocked off out of the market. It was definitely not a plausible even to experience not one black swan, but two black swans in 2022 for cryptocurrencies. And it's exceptional and very sad how many people lost their life savings, how many projects just went missing overnight for the May's crash. Back in May, June, there was a Terra Luna crash, right? Which basically, was this ecosystem for so many projects to be built on. And all of that, huge top market capitalization projects basically evaporated overnight, right? Leaving so many people in doubt and uncertainty, just moneyless, right? So we got this first black swan crash, and another one came in with soon later in the FTX, right? This FTX, very infamous black swan event that also pulled the prices lower towards 15,500s, which marked the bottom so far. And it does bring a lot of reason and a lot of reasonable idea for why this is the actual cyclical bottom, the cycle bottom. And ever since, it looks that we may have just started a new tale and a new story for the fifth bull market for Bitcoin. That's the chart about it.
It's such an interesting, and I love, that was a brilliant history lesson of Bitcoin, how it's evolved, and clearly something has changed, right? I always talk about a change of character in the chart. You've seen that with the moving average crossover. You've seen where it's starting to, pound out some move to the upside. Your second chart is looking at the equity space and looking at what I would consider offense over defense. What does this tell you about the conditions that could provide upside for something like Bitcoin?
Yeah, that's an excellent note, Dave. In fact, I wanted to provide just a little bit of broader context, right? The markets do not trade in vacuum. The markets are basically in free float, free market. Whenever you release, the markets are kind of like just interconnect, just build those bridges, those relationships. The correlation just often increases over the time, especially with the use and popularization of technical analysis, which is excellent on its own. So looking on this risk on, risk off environment, of a relative strength study, I can definitely tell that, ever since 2023 started, and it hadn't been until then, from this year, there is some significant rotation, right? There is some significant rotation, not only because it, brought back the levels unseen since, arguably, what was that, like the October, November, I would say. However, what's more relevant is that there was this significant shift and rotation above the 200-day moving average, right? So this 200-day curve, it represents the trend. And even though it's not a tradable asset per se directly, what it tells me is that tracking those relative strength, trend, and rotations, we are looking at something that is a good candidate that aligns with a very strong seasonal pattern for the pre-election years, especially if they're preceded by the midterm bears. So typically this type of market, following the bear markets, are very strong in terms of the recovery, are very strong in terms of the performance. If I'm not mistaken, following the Stock Traders Almanac for this year, it was about 20% on average for the returns for the indices. It's definitely very, very strong seasonal pattern in favor of the risk on environment. And well, Bitcoin is definitely considered by lots of institutional investors, by institutional portfolio managers, to be a risk appetite barometer, right? So many people, many investors, many firms, when they try to measure this risk on environment, they would also look up at the Bitcoin prices. And having this bullish context for the potential, recovery in 2023, for what it seems, it definitely may encourage Bitcoin to, step up higher in terms of the prices.
I love it. And thanks for bringing up seasonality. We had Jeff Hirsch on the show earlier this year, author of the Stock Traders Almanac. And so far, I mean, to his credit, we've followed that seasonal playbook brilliantly. I mean, it sort of played out what you would expect with the pre-election year after the midterm election year, which kind of played out pretty much to script as well. Now, your last chart, talk to us a little bit about particular levels that you're looking at with the chart of Bitcoin, if you could. And we have volume on the bottom of this chart as well.
That's right. You're very right, Dave. This chart actually just displays a little bit of more detail, insight in what Bitcoin is looking at right now. It does seem that it stopped somewhere around $25,000. People love those round numbers. We love to frame our minds in our anchor somewhere up there to kind of like have this easy path of thinking, easy targets to memorize. So $25,000, $30,000 is definitely one of those levels, that flipped. Like I said, that used to serve as the June lows for 2021, right? That was the significant floor that was, that had been defended until the bear market stepped in for good. And looking at the significant crossover from the price perspective, while Bitcoin rolled over $20,000 area represented by the 200-day moving average, which has notably shifted, right? In terms of the direction, the slope has shifted, the angle has shifted. While for the 2022, the entirety of the year, basically the 200-day moving average representing this primary trend, the bull market or the bear market, it just continued to decline. It just continued to nuke lower, right? And as a result, there was a lot of bearishness, as people naturally will assume, traders will often assume the continuation in the direction of the trend. And that often works because of persistence of trends. So having shifted, what it tells me is that even though there's a little bit more flatness and not necessarily like a very significant slope, upsloping curve for the 200-day average, the trend has shifted. That's the important message. And it's backed by so many confirmation concepts, right? Talking about the volume spikes. So volume spikes, just, that is one right timed perfectly on the same breakout day. There was a significant volume spike. Volume spike is, there's one outlier that is kind of like just way bigger than the rest of the preceding volume bars. And this is what was noted on the breakout day. However, it's not obligatory to have it from the technical viewpoint. Having it is definitely, of good addition. Besides, we are talking about the overall travel percentage distance from low to the high locally for about 65%, right? So there's not much doubt that this shouldn't be associated with noise. It's just not necessarily like a 1% move up, 1% move down, just randomized. We are talking about some strong persistent movement, and when there is a significant persistence in the breakout over 65%, I would argue that this rather is not necessarily an accident. We're talking about almost what it will still be 2 months spent above the 200-day moving average. So this time factor spent outside a significant breakout threshold is also met, right? We are talking about increased volatility. We are talking about this overall paralleled breadth increase as well. Bitcoin, as well as other cryptocurrencies, basically moved in terms of the breadth to the upside by 10x. We're talking about the improvement from 5% at the start of the year for the percentage of the coins above 200-day moving average to what it is right now, above 50%. So that's a significant concept that we know otherwise as confirmation, and has many different technical angles and factors that all of those seem to, come up in one point and show the same story.
Adrian, we only have about 30 seconds left, but I'd love for you to answer this. For someone who still thinks of cryptocurrencies as sort of an opaque market, a confusing market that they're less familiar with, what would you point them to read, watch, or anything to learn more about the space?
Well, I'd love definitely to make sure that technical analysis is a study that is worth reading, that is worth expanding, that is worth definitely developing into and learning. And Warren Buffett said that the best investment you can make is investment in yourself. The more you learn, the more you will earn. That's what I keep repeating everywhere I go on a keynote stage. That's what I keep promoting. And investing in your knowledge, investing in books, well, signing up for CMT Association, definitely try the Market Technician Association is one of the places to be. Well, never stop learning. That's definitely my 2 cents to it.
Adrian, it is a pleasure to have you on the show. It's been so good to get to know you. I hope this is the beginning of a lot of great conversations together. Stay safe and be well there in Poland. We'll talk to you again soon.
Thank you so much, Dave. Stay safe.
That's Adrian Zduńczyk. Adrian's the founder of TheBirbNest. Again, has done such a fantastic job of sharing a lot of expertise on the cryptocurrency space, and really has grown into quite an expert into applying the technical toolkit to cryptos. And I love some of his thoughts of just some of the simplicity of thinking of the rotations, right? Doing a crossover technique, just looking at the pattern in price and volume. It's back to the fundamentals of what we learned from reading John Murphy and Martin Pring and others. No reason why we shouldn't apply those to a space like cryptocurrencies on Bitcoin and others. Great take there from Adrian Zduńczyk at TheBirbNest. We need to wrap the show, folks, and go to the 3 and 3. Let's talk about 3 charts in 3 minutes that tell the story of this market environment. Chart number 1, I was inspired by today's guest to think a little bit about the longer-term returns in Bitcoin. I'm going back to the October low for the S&P 500. Returns from the October low to today, 11.2% positive for the S&P. That outpaced gold, but not by much. And yesterday on the show, I was talking with Chris Verone about stocks versus gold. They're actually pretty comparable. It's coming off of the October lows. Now, those two things have far outpaced bonds, up about 1%. In brown crude oil, down about 4%, the US dollar down about 6.3%. But you know what outperformed all of those? Bitcoin up 22.5% from the October low for stocks. Chart number 2, looking at names and areas of the market that are showing strength. Again, my most recent YouTube video is focusing on, instead of buy low versus sell high, it's buy strong versus sell weak, and thinking about trend following and momentum investing by looking at some of the examples of charts that have been working and charts that have been struggling. BorgWarner is one of the names that came up on my scan today for stocks making new 3-month highs. And I like the rotation. A lot of the auto parts names, BorgWarner's one of them among others. ALV, I think, was another one. Aptiv, APTV is another one that comes to mind. But what's striking about this chart is the fact that we've made a nice rotation above the 200-day and then continue to push higher. And in general, if I own a bunch of things that are above 2 upward sloping moving averages, I'm going to feel pretty good about the prospects of my portfolio, especially when it's outperforming so dramatically. And that's why the relative strength line, I think, is an important thing to include on your stock charts work. Finally, I feel like for every chart that's working, you can find other ones that are not. And media names, entertainment names are sort of the obvious things that I go to when I'm looking for an example of a chart that's been struggling for a while. But I'm concerned a little bit by names like Home Depot and Lowe's. Lowe's, an earnings name this week, down about 5.5% today, pushing below its 200-day moving average, really for the first time since the fourth quarter of last year. What's concerning about the chart of Lowe's, not just the breakdown today, but the fact that it comes after the inability to get above resistance. It spiked to a high in August, tested its 200-day just while the S&P did. And while it broke above its 200-day, which was encouraging in November, look how it's failed to get above that same level a number of times. It's become such a consistent resistance around 215 to 220. From there, it's broken down again, and instead of holding support this time, it's actually broken below the 200-day. The momentum getting a little more in the bearish range, below 40. So I'm concerned by charts like this that rotate lower. And again, it's a great reminder, in my opinion, to, again, focus on what's working, leaning into what's working, and leaning away from what's not working. There are plenty of charts that appear to be going up right now. Folks, that's a wrap for the show. I want to thank you for joining us every weekday after the close. It's such a pleasure to do the show for you every trading day. All of our previous interviews and some great episodes can be found for free at StockChartsTV.com. Also on our YouTube channel. Special thank you to Adrian Zduńczyk from TheBirbNest, joining us from Poland. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Be well, stay safe. We'll see you tomorrow. Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.